Hey everyone, welcome back to Corporate Decoder, the place where we decipher the corporate world. Today we're diving into a filing from Cottonwood Communities, and let me tell you, it involves preferred stock, private offerings, and enough numbers to make your head spin. But don't worry, we'll break it all down nice and easy. So what exactly is this Form 8K? Think of it as a corporate UPOS, we need to tell you something report. Companies use it to quickly announce important events to their investors. In this case, Cottonwood Communities is letting everyone know about some recent sales of their preferred stock. First, a quick intro to the company itself. Cottonwood Communities is a real estate investment company focusing on investing in student housing properties. Now let's get into the meat of the matter, the sale of stock. Equity securities are shares of ownership in a company. Cottonwood Communities is conducting what's called a private placement offering. Basically, they're selling shares of their preferred stock directly to a select group of investors, known as accredited investors, without going through all the red tape of a public offering. Think of it as an exclusive sale, and this is exempt, meaning excused from the usual registration or sign-up process. The company launched an offering in December of 2024, offering up to $150 million in shares of their Series 2025 preferred stock. This stock is being offered in 25 preferred stock. This stock is being offered in a couple of ways, either for cash at $10 per share with some discounts for certain buyers, or in exchange for older shares of their Series 2019 and Series 2023 preferred stock. This lasts until June 30, 2025, but they could extend that date if they want to. Here's where the numbers come in between April 10, 2025 and April 17, 2025. Cottonwood Communities issued and sold 97,757 shares of April 17, 2027 shares of April 17, 2020 dollars. In also paid out $49,000 in dollars in relative 2023 in shelling commissions and 27 and add dollars ab 172s for getting the sale done. During that same week, they swapped 127 sold 9757 shares of Series 2025 preferred stock for those older Series 2020-21 in commissions and 38,070.27 thousand said $5 there in the market. And that's the report. Not super exciting, but important for understanding what Cottonwood Communities is up to with their fundraising. Now let's zoom out and see what this means. Cottonwood Communities is actively raising capital through these private offerings, and they're using the money to fund their investments in student housing. The fact that they're offering the new stock in exchange for older stock suggests they're trying to simplify their capital structure and potentially reduce future obligations. However, the costs associated with these offerings, the selling commissions and placement fees, are something to keep an eye on. These expenses eat into the total capital they raise, and these kinds of fees can add up, and that can make a big dent in the profits of the company. Student housing can be a good investment, but there are risks. Changes in university enrollment, economic downturns, and competition from other housing options can all impact Cottonwood Communities' performance. So where does that leave Cottonwood Communities? They're in a market that has high potential but can face rapid headwinds depending on what happens in the broader economy. The company is in a phase of trying to grow by issuing lots of shares, and the fees and costs associated with that put a lot of pressure on the company to perform well. It's a risky strategy that requires the team to have a very good eye on the market. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more insights into the world of corporate filings. We'll keep decoding if you keep watching.